Hello guys, on the last trading day 3/10/2025 I sold the Sensex Call Options and I booked a profit of 1479 over 3 trades. So let me show you my entry and exit for the trades, and the reasons why I took the trade and what I have learned from them. So I will make the graph large. So this is the 1 minute graph. So as you can see, the market opened on 3rd with a gap down, and in the gap down I think roughly around 350 points, and it opened around 80,684. So at 9:15 itself I saw a scalping opportunity. How? It was a gap down, and this gap down gave an opportunity, and the market I saw was trying to move upwards. So in that, this long wick was getting formed, and I decided to take a sell the call option. So I sold the call option 82,000. The long green candle made the call option prices stretch, and at that wick level itself I sold this. Here it was acting as a resistance level. Not only that, if you go for a higher graph, let's go to the 5-minute candle. So here, that you can see that was a, let me mark it for you. Yes, so the first candle itself touched that level and it came down. And if you go for this 1 day candle also, we can see that there are a lot of resistance at that level, as you can see here. Here, here, so multiple times it has acted as a support level, a resistance level, support level. See, once it is a supply side level. This level is very important. After touching it, it has gone up so high. See, once it is broken, came down to test and it went so up. So that level is, and when it was coming down also it touched it, came down and then went down. So you can see how important this level is. When it was coming up, it acted as a resistance and it fell, and then it went up, and then it came down again and tested multiple times. It was tested. So I had marked all these things before itself, and when it came down, when that gap down happened, at that time itself I saw it as an opportunity and I sold the call option. Here. So my plan to take advantage of that gap down opening worked well, and the market did test that resistance and went down. When I saw that the levels were going to be tested again, once it went down, it went, and again it was coming up. So I thought not to take chances, and I exited the trade at roughly around 9:23. As you can see, it is in the second candle itself I exited. The second candle itself I exited with a profit of roughly 1,220. So the next I entered a trade when I saw the market was the next trade was I took it at 9:48. Let me show you the graph. So here the graph is, this is a 1 minute graph is coming up. So in that initial half an hour, a channel was forming, and you can see my parallel channel. Let me try to do that for you. See, so a channel was getting formed actually, and due to this, when I saw that again it was going to go up, testing this channel, I sold a call option at this level, roughly around this level. and I misunderstood the market. I thought it was going to go down, so I sold a call option when the values were stretched, and but the market broke out of the channel upwards. It broke out, and so I sold the call option. This is 1 minute chart, so I sold within few minutes itself. I sold the call. I got out of the trade with a profit of 213 due to the this thanks to the theta decay. There was a previous day close that was acting. I knew there was this level was there. It would have acted as a resistance, but I did not want to take a risk. I exited at this level itself. I did not want to wait to see because the market was going up in such a manner. So I did not want to take a chance over that. And the third trade also, it was also not that successful. The moment I saw it was market was going against me, I had to exit. Let me show you. As you can see, I ended the trade when I saw that this level was broken. If you check it out in the 5 minutes candle, you will see uh, this this level was broken. This candle broke that level at that last minute when the candle was particular. It broke that level, and when it was coming up to test that level, I sold the call option. But against my understanding, the market continuously went up. It was trying to fill that previous gap. So again, when that level was broken, I exited the trade. I did not want to go against. We are nobody to fight against the market. The moment market shows us the direction, act accordingly. Get out of the trade and don't fight against the market. So the learning that, and you can see just a mega rate. I was able to get out of it at a break even. So without any injury, I was able to get out. So the understanding is that you have to get a good grip of the previous levels in the market, as it will define the basis of the market behavior. Keep a close watch on the market mode and keep strict stop loss. Enter when the market valuations seem stretched, as it gives the room to exit with break even if when the trade is going against you. You can be uh, you can get out without much of an injury. The trade will be successful because of the risk management and monitoring of the levels in the market. Always wait for the confirmation and do not keep a trade if the market dynamics change against you. With this approach, I was able to book a profit of roughly 1,479. And if you found this breakdown useful, make sure to like and subscribe to my channel Intraday Trade Moves. I post regular trade recaps with real screenshots and setups purely for educational purpose, not financial advice. Thank you.